What is the smarter investment in 2025? The fast-paced world of stocks or the stable ground of real estate? In this video, we'll look at real numbers, risks, and returns, so you can decide for yourself where to put your money. Investing in stocks means owning a small part of a company. As the company grows, your investment grows with it. You can easily buy stocks through platforms like Robinhood, eToro, or Fidelity. What makes stocks appealing is their liquidity, fast growth potential, and low entry cost. But the risks are real. High volatility, emotional decision-making, and panic during downturns, all are major challenges. To imagine the power of stocks, picture this. If you had invested $1,000 in Apple 10 years ago, today you'd have over $10,000. Real estate, on the other hand, is a completely different kind of investment. You're buying a physical asset, a house, an apartment, or a piece of land. You make money through rent or property appreciation over time. Real estate is a tangible asset, provides stable monthly income, and offers tax advantages. However, entering this market requires a larger capital and comes with responsibilities like maintenance and dealing with tenants. Also, real estate is not easy to sell quickly. For example, imagine owning a $200,000 house rented for $1,500 per month. That's over $18,000 a year in income. Let's compare both options by the numbers. Annual returns for stocks typically range between 7% to 10%, while real estate offers 6% to 8%, including rent. The cost to enter the stock market is very low, while buying property requires tens of thousands of dollars. Stocks are more volatile, but more liquid. You can sell them quickly. Real estate is more stable, but harder to liquidate fast. And in terms of effort, stocks require far less time and management than real estate. So, which investment should you choose in 2025? If you're a beginner with limited capital, stocks are an excellent starting point. But if you're looking for stable monthly income and long-term tax benefits, real estate might be the better fit. But why not combine both? You can diversify your investment portfolio. For example, putting 70% into stocks and 30% into real estate through REITs or fractional property platforms. In the end, there's no single answer that fits everyone. It depends on your goals, your risk tolerance, and your lifestyle. But one thing is certain, the worst decision is not to invest at all. So, what's your choice? Let us know in the comments. And don't forget to like the video and subscribe for more smart money content. Thanks for watching.